It is coming down to the wire as the bulls fight to maintain their posture. A massive strike of manipulation on the 30-minute time frame fired off and sent price action down to our lower targets from last night's thread of analysis. Let's pop open the charts for a true edge over tomorrow's sessions. Welcome back to the channel on this Taco Tuesday. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys, and welcome back to the channel. Let's go ahead and open up FNGR here, and we're going to go ahead and take a look at this 30-minute time frame strike of manipulation. So please go ahead and bear witness to this, that, you know what, I can tell you this. I can tell you this for certain. It is absolutely difficult. It is more and more difficult as the time frames ascend, right? So if you're looking at a 30-minute time frame, it's incredibly difficult to strike a manipulation signal. It becomes more difficult going into the hourly and so on. So I don't know if you've noticed the pattern here. We have been observing all of these strikes of manipulation over the last few days, and the majority of them, if you haven't been able to tell, the majority of them are being fired off in the immediate micro time frames, like 10-second intervals, 15-second intervals, 30-second intervals. We even see them all the way up to the 5-minute, and very rarely we see them in the 10 and 15, right? But now, today, that was a 30-minute strike of manipulation on the 30-minute chart. And this sent price action all the way down to that area of 386. I understand we spoke about this yesterday. In fact, our bottom side target from last night's thread of analysis was 385, right? So I personally wasn't expecting to drop that low, but we have to watch out for those targets anyway. The reason why 385 is critical is because that is the official invalidation zone, and we bounced right from it, right? So I can honestly see that, yeah, there could have been some day traders trading that inflection, right, to get a nice bounce to the upside that led to almost a 13% gain to around 434. So that was a huge bounce, right, for a lot of people. But for those of you who are holding, you must know the risk right now, okay? That 385 bottom marks off a very important inflection zone, of which we've already talked about, right? So I can go ahead and just remind you here. This is the weekly time frame, right? And we were identifying this just yesterday. This target right here, 385 being the bottom side of this very candle structure here, right? That is the invalidation zone. If we fail, I would say a minimum 4-hour closure. I honestly think it would even do it with an hourly closure. But to be honest with you, an hourly closure is really micro. So I think I would have to lean on a 4-hour closure. Okay, so yeah, if we get a 4-hour closure candle beneath this 385, that can introduce further downside targets, as this would be the official invalidation zone. Okay, team. So, but also remember that the thing is that from there, it looks like price action has bounced to the upside pretty severely, right? So I just, as we get closer to that area, I mean, you saw today that touching that 385 or 386, that was a 13% bounce to the upside, the difference between 386 and $4.34. So you can see how that could be a critical demand zone. So I'm just not sure if we have the bull pressure for the upside there, because this is extreme fear here, okay? So just keep your eyes on that target. I need you to be very careful, because these threads of analysis here, they're becoming a little shorter because of that very fact, as we're getting so close to invalidation here. Okay, so now please notice here that we do have a falling wedge, of which yesterday we were mentioning that we were respecting this the bottom regression pretty nicely. So that 386 capitulation bounced off and got us to resist at the very top side regression of the falling wedge for it to just come back one more time. So if we were to see another downside here, I can see another downside coming down to about 395 or 396. Okay, so if it is the case that we need to come back down to 386, that actually could be in the cards as well. So for now, I guess I'm just going to go ahead and point out the area of about 396 to about 386, or 385 to be honest, right? Because that's the official range that we've actually been talking about. So yeah, it would be the 386 to 385 bottom, and we have to see if we would be able to bounce from there. If not, team, then we would definitely face some serious pressure to the downside if we start getting those closures. Okay, so we've already met the first bottom side target from the gray descending descending or falling wedge, sorry, right? This one right back here. And that take profit was literally the $4 mark, where we actually came back and supported right from the adjusted falling wedge. That regression landed at that $4 mark too. Okay, so we already reached one of those targets here, and we're starting to break prior bar lows with this one here. So that gives us a little bit of a warning. Okay, so usually as you know, as day traders, we don't like to see breaks of prior bar close if we are playing long. If we are playing short, that usually is a good sign for a continuation to the downside. So I want to give you both of the perspectives here from the bulls and the bears, as I am an ambidextrous trader. Okay, team. So let's go ahead and continue on here and take a look at a couple things, right? So yesterday we noted that we had several iterations of bearish engulfing candle formations, and today it looks like we may have printed one. Let me see. Could this be one? The opening of this candle here is 405. The closing of this one was 405. No, it's not a bearish engulfing, right? But what I would say here is that it is kind of holding. It feels like it's holding on to a thread here. So if there is a continuation to the downside here, that there could be a slightly lower time frame falling wedge being built of sorts here, right? So I'm not sure if it's actually going to happen here, but I mean, let me see. Yeah, actually there could be, if it is a falling wedge that we're building on the let me see this. Yeah, wow. Okay, yeah, if that is the case, hold on. I'm not sure if we can do it like this. And that would be I don't know I don't know what to make of that candle there. It's just so, it was so out of nowhere, right? It was just so, okay, well, actually there is a shot at not a falling wedge. Actually, it looks like a channel maybe. This is so early on, so it's hard to guess this, right? So I'm saying that it could be a channel, because if it is a channel, then you know our thoughts to come back down to 385, 386 are being respected with this formation. So in other words, there could be a slight upside here for us to resist from 418 again. We would come back down to this area here, which matches the 385 for another bounce to the upside, right? So it feels like we're kind of in a range. I'm sorry. It feels like we're kind of range bound here, and we will have to just speculate this. But if it is true, then this is a bullish formation. This is it's a descending channel, and that usually gives us an upside probability. Okay, so we will have to see how this plays out in the coming sessions. Okay, so yeah, just keep in mind that there are some dangers here for the downside nonetheless. Okay, specifically this 5-day time frame, closure happening in 17 hours 13 minutes, aka tomorrow at market close, we will essentially be printing something incredibly bearish. Okay, and that would be, let me get the Gaussian channel out of the way. That would be a 5-day bearish engulfing, and I will say that it would be back-to-back bearish engulfings on a 5-day, and that's you know, that's really not good. It is kind of displaying right now that the bulls are growing a bit exhausted, right? So I want you to know, and I want you to be aware of the risks here. Okay, while I can't tell that these there's no price objective based on these bearish engulfing candle iterations, it just says that there's a continuation to the downside to be observed. Okay, so so if that's the case, then you know there is the implication here, or the potential of failing that 385 bottom invalidation zone, and the 5-day Gaussian band may actually be giving us the bottom side target here, and that is located at about $3.20 at the mid band. Okay, so yeah, that's I have to say these things just in case. Okay, team, I really do. I really have to say them out there. I don't want to. I don't mean to upset anybody. I'm just reading to you what the probabilities are here on the chart, and I want to give you the perspective based on based on the bulls versus the bears, right? Because I can trade both ways. That's our advantage, is that you have me to be able to tell you what a bear would think and also what a bull would think, right? So it's critical to have like an inside game like that. Okay, so now let's go ahead and move on to the reason why I think there could be an upside to around the area of around 418, which we spoke of just a little bit ago. So the linear regression band here, the prior hourly candle closed inside of the band here. Okay, so that means that we get a slight pullback, of which already happened, and honestly, it could even pull back a little more to the $4 zone, right? To kind of validate the support here before a continuation to the upside. So generally speaking, whenever we do close upside of whatever junction from the linear regression channel or below, that usually means that there could be a continuation to the downside, or in this case, a continuation to the upside. It does have about a 70% probability and hit rate for decision making upon closures of the previous bars. Okay, so we do have a good shot at getting an upside move here. And I know I did say 418, right? But I will give you a range here for us to kind of observe in case we do get that upside, right? So 418, I'd say to about 425. That could be one of the ranges. And then let's see. So if I guess there could be one more range, and I guess that could be about 429 at the very top side. Before, I mean, we would need to start looking into closures upside of this linear regression band here in order for us to even continue an upside continuation. Okay, so yeah, it's very critical what we're doing here. All right, so that is another thing that we can use to our benefit here. And the 30-minute time frame is displaying actually a little bit of weakness here. So if you guys don't remember, this is the traditional setup for the RSI, right? So this is what my RSI looks like. We have the bullish control zone up here and the bearish control zone down here, right? This is bear strength percentile. I'm sorry, this is bull strength percentile. This is the bear strength percentile, and we have the bear weakness percentile and the bull weakness. Okay, so now the other lines that you see are the gravitational zones. So you have 2% up and 2% down from any junction here, and that would give you the zones of gravitation. So for example, in this area here, price action is coming down and bouncing from the mid band, but it's still within the gravitational zone here of the bear weakness percentile, this half. And that being said, we do have a downside here on the 30-minute immediate short-term time frame, SMA 14, represented by this pink line. That could be telling us that we would face that bottom side that I just spoke of at around $4, or even maybe even $3.96 to $4 before a bounce to the upside. We will see how that goes. We do not know if that. There's no way of knowing for sure what's going to happen here. There's only probabilities that we can speak of. Okay, so now the bi-hourly time frame is crossing beneath the SMA 14, and as you can see here, we're really inside of the gravitational zone, so highly likely a downside to come in. Same situation here with the 4-hour time frame, as the RSI signal represented by the baby blue line or teal line is definitely within the gravitational zone here, highly likely a downside pivot. Same situation with the 8-hour time frame, as it is inside of that gravitational zone, right? And here it actually looks like the 12-hour time frame may be in the opposing side's gravitational zone, just like here where we got pulled to the upside, right? So that could be that opportunity there. We could be lingering around the $3.86 to $4 mark for the better part of the majority of the day before us facing an upside to get a resistance at around that 418 to 429, and then starting a consolidation phase or seeing what can happen from there. I can't tell you that we're just going to fail it here. There's no way I can do that. Okay, but what I will say is that now we're approaching the support bottoms that we were talking about. This is the bi-monthly approaching the gravitational zone of the SMA 14. In other words, we're approaching this. If we're just going to make this a little bit bigger here, we're approaching this area right in here, which means that if we're coming back down and there's an SMA 14 here within this area, and price and the the RSI signal teal line is coming down to that, then that could be both of the SMA 14, right, support and the gravitational zone. So we would have support from two different areas there, and it looks like it's getting very close to it. and the monthly time frame is actually crossing beneath it. So that now that tells me that this bearish crossover on the monthly may actually be caught by the bi-monthly time frame. Okay, so that is amongst some of the hopium here. Okay, so we will see how that behaves and how that acts and how that proceeds in the following days and week, maybe. Okay, team, so now you know the risks, you know the upsides and the downsides. Please contact me if any questions, and definitely get in touch with me if you are interested in getting yourselves enrolled into the ARC Masters trading course. It is a 16-week mentorship program, and I have opened up another 30 seats for you, right? So just in case you are wondering, right, what we're doing there, right? The third week already started. I'm sorry, the second week already started with the Track 3 students. So now I'm getting the Track 4 students ready, and we would be getting a 16-week mentorship here. And please remember that we would be starting from the very beginning. Like, what is a candle, right? All right, team. So with I think we're pretty good here.